Dinar Daily. Have you ever seriously considered the possibility of a foreign currency you've held for years suddenly experiencing a monumental surge in value? It's a scenario that often feels like pure fantasy, yet the emotional rush and tangible financial implications are almost impossible to ignore. Imagine waking up to your typical morning routine, the familiar scent of coffee brewing, a casual check of emails, only to realize that a seemingly modest collection of banknotes, perhaps tucked away in a drawer or secured in a safe, now holds the potential to reshape your entire financial future. The sudden capacity to settle outstanding debts, reevaluate long-term investment portfolios, and access previously unattainable opportunities would be exhilarating, shifting your reality in an instant. This dramatic shift, while often the subject of wishful thinking, is now being discussed with a new, more serious tone within specialized financial circles, suggesting the dream might be closer to a tangible reality than ever before. The global financial landscape is characterized by inherent volatility, yet it's this very unpredictability that creates rare opportunities, particularly when combined with significant real-world events, major geopolitical shifts, and decisive policy choices. For those closely tracking market activity, a noticeable and unusual level of engagement has been developing around specific currencies, most prominently the Iraqi Dinar and the Vietnamese Dong. These currencies, which have historically been overlooked or significantly undervalued on the international stage, are now drawing considerable scrutiny from sophisticated analysts, professional speculators, and even established regional banking institutions. This heightened interest isn't merely born out of fleeting speculation. Rather, it's being fueled by observable patterns in banking adjustments, strategic transaction preparations, and clear signals emanating from governmental bodies, all of which suggest that a significant financial movement is rapidly approaching an inflection point. The increased focus on both the Iraqi dinar and the Vietnamese dong is driven by a complex interplay of internal economic fundamentals and external geopolitical dynamics. Each nation is pursuing distinct economic strategies designed to foster long-term growth and stability. Iraq and Vietnam have both been implementing policy reforms which, if sustained and successfully executed, could logically lead to a considerable strengthening of their respective currencies on the world stage. Compounding this, reports circulating within informed financial communities point to the imminent establishment of specialized exchange centers dedicated to facilitating transactions in these currencies. The planned opening of these centers, possibly as soon as tomorrow, represents more than a minor logistical change. It is a concrete, high-level indication of readiness for a substantial expansion in currency transaction volume and scope, signaling a move toward broader financial integration. For investors who have maintained positions in dinars or dong for years, the journey has often been marked by uncertainty, relying heavily on informal forums, unverified rumors, and anecdotal reports regarding a potential revaluation or appreciation. However, the recent operational and institutional developments signal a departure from the purely speculative environment of the past toward a much more tangible and actionable situation. Analysts are particularly focused on observed changes in banking operations, such as the extension of operating hours, the documented hiring and training of additional staff specializing in foreign exchange, and the installation of new systems explicitly designed to handle a much higher volume of complex currency transactions. These adjustments are highly consistent with the logistical groundwork needed to anticipate and manage a major increase in public and institutional activity surrounding these particular currencies. While it remains crucial to emphasize that no official guarantees exist regarding the specific timing or the ultimate magnitude of any currency appreciation, the current assemblage of financial and governmental signals clearly suggests a significant shift in momentum. Those who currently hold dinars or dong may find themselves at a critical juncture, where the difference between a successful outcome and a missed opportunity could hinge entirely on the ability to act promptly and decisively. Being fully informed and logistically prepared as these specialized exchange centers reportedly begin operations could be the key factor in capitalizing on the potential for considerable financial gain. The confluence of operational preparations, sustained market interest, and strategic governmental signaling creates a scenario that is noteworthy and potentially transformative for committed currency holders. The indications pointing toward a potential surge in the value of the Iraqi Dinar and Vietnamese Dong are becoming increasingly visible to market observers. Financial institutions, both within the originating countries and internationally, are making palpable operational adjustments that are difficult to dismiss. These preparatory measures include a clear revision of standard banking hours, the allocation of resources to train specialized personnel for complex currency transactions, and the establishment of secure, high-capacity systems capable of managing unprecedented transaction volumes. These actions collectively suggest that banks are not simply reacting to casual inquiries. They are proactively anticipating a serious, tangible increase in demand for these specific currencies, which underscores the potential for a historic opportunity for investors and holders. The prospect of a sudden, significant increase in currency value is compelling, not only for the substantial potential profits it represents, but also for the broader, stabilizing impact it could have on individual financial security. Long-term holders who have exhibited patience and commitment to the dinar or dong may finally be seeing their multi-year strategy materialize. However, it is fundamentally important to approach this situation with both informed judgment and a healthy degree of caution. While the excitement surrounding these developments is understandable, adhering to responsible investment principles is crucial. This includes meticulously verifying information sources, maintaining a clear understanding of market mechanisms, and thoroughly considering all inherent risk factors. Financial history is replete with examples demonstrating the often unpredictable nature of markets, and dramatic shifts, while possible, are rarely assured or guaranteed. Nonetheless, the current environment, characterized by the convergence of institutional operational preparations, persistent market interest, and consistent governmental signaling, creates a unique and potentially transformative scenario. As the reported opening of specialized centers approaches, holders of these currencies should be positioning themselves to make strategic, financial decisions that could genuinely reshape their economic future. Remaining aware, maintaining vigilance, and ensuring preparedness are essential steps for anyone looking to navigate these emerging opportunities successfully and prudently. The most pressing question for currency watchers and investors alike is a simple but profound one: why now? After years of persistent speculation, unfulfilled rumors, and countless prior predictions regarding the Iraqi dinar that ultimately never came to fruition, what makes this specific moment genuinely different? The answer is rooted in a fundamental and remarkable shift in Iraq's deliberate, focused strategy towards stabilizing and successfully re-establishing its currency within the global financial system. For decades, the dinar's value was depressed, largely due to the cumulative and corrosive effects of protracted conflict, stringent international sanctions, and pervasive political instability, all of which led to its perception as an inherently risky asset. The current landscape, however, presents a dramatically different narrative. Iraq has been actively engaged in implementing policies meticulously aimed at fostering long-term economic stability, significantly improving internal governance, and strategically strengthening its regional and international trade relationships. Political reforms, coupled with a concerted, nationwide push toward economic modernization, are gradually but decisively reshaping global perception of the dinar. Analysts have noted that Iraq is increasingly opening its economy to foreign investment at levels not witnessed in decades, signaling a profound change in economic philosophy and an intention to integrate with the global market. Perhaps the most significant development is the ongoing discussion among high-level economists, government officials, and key financial institutions suggesting a concrete, actionable plan to formally repeg the dinar. Crucially, this plan is rumored to involve pegging the currency, not solely to the US dollar, as previous unsubstantiated rumors suggested, but rather to a diversified basket of global currencies. This strategic and nuanced approach reflects valuable lessons learned from other successful emerging economies and signals a deliberate, sophisticated attempt to shield the currency from the specific vulnerabilities inherent in being tied exclusively to the monetary policy and market fluctuations of a single foreign benchmark. In essence, the convergence of demonstrable political reform, a clear commitment to economic openness, and a potentially transformative monetary strategy creates a scenario that feels substantially and qualitatively different from any previous period of prolonged speculation. The strategic decision to potentially peg the dinar to a basket of currencies is far more than a mere technical detail. It signifies a fundamental shift in how Iraq intends to position itself within the complex global financial ecosystem. This basket approach creates inherent balance and resilience, operating much like a sturdy foundation supported by multiple pillars. If one component currency weakens, others help to successfully support the dinar's overall value and stability. This diversified approach starkly contrasts with the inherent risks of a single currency peg, which exposes a nation entirely to the volatility and policy decisions of another economy. By signaling an intention to pursue a basket strategy, Iraq appears to be communicating a powerful message of both financial prudence and a commitment to long-term stability. Major global economic powers, including China and Russia, have already successfully adopted similar currency basket approaches to safeguard their economic interests and maintain credibility in international trade. Iraq's move to adopt this system, if fully executed, would be one of the clearest and strongest indicators to date that the dinar is being prepared for a legitimate and substantial reintegration into global financial markets. This strategy sends an unambiguous message to foreign investors, international traders, and governments alike. Iraq is deeply serious about building trust, actively mitigating financial risk, and establishing a sustainable, robust financial framework capable of supporting decades of sustained national growth. For those individuals who have patiently held on to their dinars, this potential repegging could represent the single most impactful factor that transforms years of patient waiting into a verifiable, tangible opportunity. The depth of this strategic policy shift underscores the new seriousness of the situation. Compared to past speculative waves, the implications of Iraq's strategic currency plan extend significantly beyond the dinar's exchange rate alone. This period marks a critical and profound moment in Iraq's overarching economic transformation. The country is demonstrably entering a phase of massive, national-scale development, encompassing projects from the comprehensive modernization of its vital oil fields to multi-billion-dollar infrastructure upgrades, including new highways, strategically important ports, and advanced energy networks. Furthermore, Iraq is actively positioning itself as a central regional trade hub, aiming to connect markets across Asia, Africa, and Europe, while simultaneously fostering emerging domestic sectors such as technology and manufacturing. These large-scale developments are not speculative ideas. They require and demand genuine international partnerships, massive inflows of foreign capital, and a long-term, unwavering confidence in Iraq's political and financial stability. The increasing, tangible involvement of the U.S. and other significant foreign interests underscores the demonstrable economic viability of these ambitious initiatives. In essence, the focus is now squarely on building genuine, foundational business opportunities, rather than merely creating short-term market hype or perpetuating unfounded rumors. Investors who grasp this broader economic context, the crucial interplay between strategic currency policy, burgeoning international trade, and substantial infrastructure investment, can clearly see why this moment may indeed be profoundly transformative. The convergence of ambitious economic modernization, sophisticated strategic currency planning, and growing international confidence makes this one of the most compelling and potentially significant periods in Iraq's post-war financial history. For those who hold dinars, understanding this bigger picture, the foundational forces Driving the economy may be just as critical as monitoring daily exchange rates. These fundamental developments are creating the essential environment necessary for any potential currency appreciation to have a lasting, substantial, and meaningful impact on the nation's economic future and its standing in the world. How might this extraordinary scenario practically unfold? Observers suggest thinking of it as a methodical three-stage process, where each phase builds critical momentum toward long-term stability and opportunity. Stage 1, potentially beginning as early as tomorrow, centers on the reported launch of specialized exchange centers. These facilities are designed to process transactions in the Iraqi Dinar and Vietnamese Dong, likely at improved rates, offering holders greater ease and security for converting, trading, or verifying their holdings. This initial stage is crucial because it represents the first public, tangible, and institutionalized step in what could be a much broader financial transformation. Stage 2 is projected to involve the formal repegging of the dinar to a basket of global currencies. By intentionally diversifying the dinar's backing against multiple strong, established currencies, Iraq aims to stabilize its economy, actively protect it against singular market volatility, and send a clear signal of international financial credibility. This move would be a powerful demonstration of a commitment to a stable and predictable monetary policy that adheres to global best practices. Stage 3 represents the ultimate goal, the full integration of the dinar into global financial markets as a freely traded currency. This would enable the dinar to operate within the international financial system without the current artificial restrictions or regulatory constraints. Each stage is logically dependent on the last, systematically creating a clear and sustainable pathway toward increased stability, enhanced investor confidence, and legitimate market legitimacy. Thoughtful investors should consider both the immediate and long-term implications of each stage, preparing for potential shifts in rates, liquidity, and global market access at every level of the process. This three-step framework is not purely theoretical. It directly reflects the observed operational changes, recent policy updates, and documented economic reforms that strongly suggest the necessary groundwork for such a transformation is already well underway. Therefore, preparation is absolutely critical for anyone hoping to successfully navigate these evolving developments. In Stage 1, currency holders must ensure that all dinar and dong holdings are meticulously organized, properly documented, and logistically ready for immediate verification or exchange. Proof of purchase or detailed receipts may be necessary, particularly for larger transaction amounts. To comply with international financial regulations and facilitate a smooth, uninterrupted process, Stage 2 preparation requires a deeper understanding of the mechanics of how currency baskets operate, as this knowledge will significantly influence decisions about the optimal timing for exchanges. Accurately assessing relative value and intelligently mitigating potential risk. Essential knowledge about which foreign currencies comprise the basket, along with tracking their current global trends, becomes paramount for making truly informed financial choices. Stage 3 introduces strategic considerations focused on long-term asset management. Investors must decide whether to exchange all their holdings immediately or retain a portion, perhaps anticipating further appreciation as the dinar gains traction and utility in established global markets. The greatest opportunities often materialize in the early stages. Before full global integration, when institutional activity may be limited but the potential upside remains high. Consequently, strategic preparation involves both logistical readiness, the practical organization of currency, and a thorough market education, ensuring that investors can act decisively and confidently as each stage of this complex process unfolds. Understanding the mechanics of currency valuation, diligently monitoring institutional banking activity, and staying alert to any forthcoming policy announcements are all essential components of a disciplined, informed approach. It is entirely natural to harbor skepticism, particularly given the long history of false alarms, unfulfilled predictions, and persistent rumors that have surrounded the dinar and other historically undervalued currencies. Yet, this particular moment appears markedly different because institutional behaviors providing confirmation signals that speculation alone never could. The extensive adjustments in banking operations, the clear policy updates, and the visible economic reforms collectively demonstrate that Iraq is actively preparing its entire financial infrastructure for a potential major surge in the dinar's value and global standing. Beyond the potential gains for individual investors, the nation of Iraq itself stands to gain substantial and tangible benefits from a stronger dinar. The ability to conduct a greater volume of its massive oil sales in dinar, rather than solely in US dollars, allows Iraq to retain more national wealth domestically, which in turn supports critical public investment and significantly reduces the nation's dependence on foreign financial systems. Furthermore, a credible and consistently stable currency acts as a powerful magnet for foreign direct investment, providing the essential capital needed to fund massive infrastructure projects, industrial development, and technology sector growth. Moreover, a strong national currency significantly enhances economic independence by decreasing reliance on external reserve currencies and reducing the country's vulnerability to the unpredictable fluctuations of global monetary policy, coupled with improving internal security conditions, increasing political stability, and rising oil production volumes. Iraq is laying the comprehensive groundwork for a currency that possesses the potential for sustained long-term strength and international credibility. This context underscores why careful, deliberate preparation and close attention to emerging institutional signals are more critically important now than at any previous time for holders of foreign currencies like the Iraqi Dinar and Vietnamese Dong. The days ahead could represent a truly pivotal turning point. Imagine the scene reportedly unfolding at specialized exchange centers, early morning lines forming, holders clutching their necessary receipts and documentation, and a palpable mixture of anticipation and cautious excitement filling the air. This environment is likely to be both highly energizing and logistically challenging. Exchange rates may initially be unknown or subject to rapid fluctuation. Procedural rules and transaction limits could vary significantly between institutions, and bank staff may be handling unprecedented volumes of transactions. For these reasons, thorough documentation and preparation will be absolutely crucial. Those who arrive organized and fully informed will navigate the process far more smoothly than those who choose to wait until the last minute. The logic is akin to preparing for complex international travel. You wouldn't delay packing or checking visa requirements until your departure day. Here, detailed preparation might include ensuring all receipts, proof of purchase records, and required personal identification are immediately accessible, meticulously verifying that currency notes are in an acceptable condition for exchange, and possessing a clear, predetermined understanding of potential transaction limits or specific procedures. Beyond the logistical necessities, mental readiness is equally paramount. Patience, acute attention to detail, and the ability to maintain calm decision-making under pressure can significantly influence the ultimate outcome. In such high-stakes moments, small, correctable oversights can easily lead to unnecessary delays, missed opportunities, or confusion. Conversely, careful, proactive planning allows participants to act decisively and confidently. The difference between success and frustration in these early stages could genuinely hinge on thorough preparation, underscoring why proactive readiness is not merely practical. It may be the determining factor in who benefits most from this rapidly emerging financial landscape. 2. Fully appreciate the gravity of these current developments. It is essential to recall the historical context of the Iraqi dinar. Before the decades of conflicts, sanctions, and political upheavals, the dinar was once considered a powerful, strong global currency, at times valued considerably higher than the US dollar. That esteemed status was gradually and severely eroded over decades as relentless external pressures and internal instability drastically reduced both global confidence and its inherent value. Yet Iraq's fundamental national wealth, its enormous oil reserves, its fertile agricultural lands, and its strategic geographic position bridging Asia, Africa, and Europe has never disappeared. The nation remains strategically and economically vital. What is now transpiring can be accurately viewed as the reawakening of a long-dormant financial and economic power. This process is not centered on chasing immediate, reckless, speculative riches. Rather, it is about observing a nation methodically and deliberately reclaim its rightful role in the global economy. Currency adjustments, the planned launch of specialized exchange centers, and the potential comprehensive repegging of the dinar all strongly signal that Iraq is strategically aligning its domestic financial mechanisms with stringent international standards, thereby making genuine, sustainable economic growth and full global integration finally possible for investors and currency holders. This historical context highlights the critical difference between speculative activity based purely on rumor and strategic, informed positioning that accurately accounts for historical trends, comprehensive economic reforms, and current geopolitical realities. Recognizing this distinction is key to making informed, disciplined, and balanced decisions that prudently weigh potential opportunity against necessary caution. There is also an undeniable emotional dimension to these developments. Many dedicated holders of the Iraqi Dinar and Vietnamese Dong have waited patiently for years, even decades, enduring skepticism from peers, self-doubt, and the frustration of numerous previous false starts and unfulfilled promises. While tomorrow may not necessarily produce instant financial windfalls, it does undeniably represent tangible institutional progress, a public, measurable step toward validating their patience and commitment. For these long-term holders, the significance of this development is as much psychological as it is financial. Yet, even amid this intense anticipation, diligence remains paramount. It is essential to strictly avoid making rash decisions driven by excitement, to refrain from ever risking essential living funds, and to maintain a consistently realistic perspective amidst the exaggerated promises frequently circulating in online forums or social media. Practical considerations must dominate decision-making. Fully understanding any applicable taxes, potential transaction fees, and relevant regulatory constraints, as well as actively planning for multiple scenarios depending on how initial exchange rates and institutional policies evolve. Strategic patience, combined with meticulous documentation and a working knowledge of the process, substantially increases the likelihood of positive outcomes while simultaneously minimizing avoidable risk. Essentially, the coming period is not only a test of market readiness, it is a test of individual patience, preparation, and prudence. What happens in the days and weeks after tomorrow may ultimately prove even more telling and definitive than the first day of specialized exchange center operations. While the initial launch represents a concrete and necessary step, the subsequent pace and fidelity of Iraq's monetary reforms will truly define the trajectory of the dinar's long-term strength. Key questions remain: how quickly and resolutely will Iraq move to formally peg the dinar to its diversified basket of global currencies, thereby fully stabilizing its value and signaling robust credibility to the international financial community? Will major international banks begin to treat the dinar with greater openness, integrating it into standard trading practices and offering wider access to foreign investors? Could regional and global trade agreements begin to transition toward denominating transactions in dinar rather than traditional reserve currencies? The answers to these fundamental questions will not be delivered overnight, but each subsequent step will offer critical insight into how seriously global markets are willing to engage with Iraq's renewed financial ambitions. Incremental acceptance is a natural process. No currency achieves credibility in isolation. The dinar's utility and value will grow gradually, with institutional confidence building meticulously, layer by layer. Observing the sustained response of foreign exchange markets, banking institutions, and major trade partners in the days, weeks, and months following the initial exchange activities will provide the clearest picture of the potential for long-term appreciation for currency holders. This unfolding sequence represents a prime opportunity to evaluate Not just the transaction rates, but the broader market sentiment and the genuine structural shifts in global monetary engagement. The upcoming stages are, therefore, about much more than immediate transactions. They're about watching a national currency methodically re-enter the global arena with both legitimacy and a defined economic purpose. As we approach this critical time, the message for investors is straightforward and clear. Preparation is paramount. Currency holders should proactively engage with their banks and financial institutions to confirm policies, ensure full compliance with regulations, and fully understand procedural nuances for any potentially large-scale transactions. Holdings must be meticulously organized and fully documented, enabling a smooth and unambiguous verification or exchange process. Developing a clear, actionable strategy for multiple potential scenarios is equally essential. Consider outcomes ranging from slow, gradual appreciation to rapid, significant revaluation or even potential regulatory delays. Sharing reliable, fact-based information with trusted networks can reinforce collective readiness while simultaneously helping to counteract the spread of misinformation or unrealistic, exaggerated expectations. Most importantly, managing expectations is critical. This is a complex, long-term process unfolding over time, not a guaranteed sudden windfall or instant miracle. Investors should approach this period with discipline, skillfully balancing necessary caution with an eye for opportunity, and maintaining a long-term perspective that accommodates both successes and potential setbacks. Practical measures such as understanding the full tax implications of potential gains, diligently tracking central bank announcements, and monitoring relevant foreign policy developments can significantly enhance preparedness, effectively reduce unnecessary risk, and increase the likelihood of a favorable final outcome. For those willing to combine thorough research, sustained patience, and strategic planning, the current environment could offer unprecedented opportunity, while minimizing exposure to avoidable mistakes. The decisive difference between reactive scrambling and proactive positioning will likely define who benefits most as this multi-stage process continues to evolve. As this chapter unfolds, tomorrow could indeed signify much more than just another rumor or speculative headline. If specialized exchange centers genuinely open as reported, it will formally mark a highly visible, public step in a plan that has been quietly and deliberately in motion for years. The next 24 hours could reveal who is truly prepared and who finds themselves anxiously scrambling to meet necessary requirements or deadlines. Taking this development seriously requires a unique combination of level-headed observation, careful logistical preparation, and the readiness to act decisively when market conditions permit. This is not merely about holding a foreign currency. It is about participating in a broader, profound financial transformation that involves institutional readiness, high-level economic policy, and significant international market behavior. Investors should utilize this opportunity to remain deeply informed, verify all developments through reliable sources, and diligently refine their strategies for both immediate transactions and longer-term wealth management scenarios. Communicating validated insights within trusted networks can strengthen collective awareness and readiness, ensuring that more holders can act effectively and responsibly rather than reacting under high pressure. Tomorrow may not guarantee wealth, but it could undeniably represent a critical inflection point, a moment when years of patience and meticulous preparation intersect with real-world institutional action, providing tangible clarity on what the financial future may hold. For anyone holding Iraqi dinars or Vietnamese Dong, the message is clear: observe closely, plan meticulously, and engage responsibly, because this could indeed be the day that marks the substantive beginning of a significant, long-awaited shift in currency dynamics.